Yeah, some unusual things are happening today with whatever was announced by the White House. I think the markets wanted to react to it a bit. I did have a long position on ES. I took it about 62.45, and my stop is basically sitting down here. It came very close to stopping me out and then immediately got snapped back. I don't want to keep holding my stop right down there because I'm realizing that this liquidity pool might be under attack. It might get attacked in the next 24 hours. So I would much prefer to move it a bit lower where I recognize this is a support zone, so keeping your stop loss at 61.99 may not be as useful. So I would be moving my stop loss down here at 61.85. It's another 15 points lower than the current level, but it gives me more comfort zone knowing that I am keeping it below the support zone and not exactly inside the support zone. So that's an update we're doing on the active positioning I have on S&P 500. Nasdaq's position is pretty much the same. There is no change on Nasdaq, where this looks like a ceiling to me at the moment. If you would put a price tag from 3rd of July candle high, you see how price hasn't closed at all on the daily candle above this level. That shows you that there's pinning action going on in the market, where the market is basically pinned to this level. It doesn't want to go down, it doesn't want to go up, it's just consolidating in time. So what exactly would make this market expand? There's only one thing which is going to happen this month, that's the earnings season, which will start unfolding starting tomorrow. Netflix is reporting tomorrow, so that's essentially what the market is waiting for, if it's not moving already. So if you look at the Netflix chart, it has been undergoing a pullback ever since the month open for the month of July. The earnings is on Thursday after close, which is tomorrow. We just have one more day left. So Netflix will be officially the first tech company to be reporting their earnings for this season. And if you were to look at the setup on Netflix, it's actually a bullish one going into the earnings, because we have had a down month so far going into the earnings. And if you look at the quarterly candle, the past quarterly candle was extremely powerful, closing at the highs. And if you apply the same teachings which I've taught on how you should be approaching the quarterly open and the monthly open in equities, essentially any drawdown which you get from the monthly open, that is supposed to be the downside back of the entire quarter before it starts expanding higher. Now the expansion higher would likely be fueled by the earnings report when it comes out, and Netflix has a very daunting habit of gapping up or gapping down on earnings. It may move like 5 or 7% on the earnings day itself. So what you would notice is that whenever earnings comes out, that's generally the mover for Netflix, and that also sets up the tone for the earnings season. So you would see over here that in the past earnings, Netflix gapped up by 15%. So if Netflix moves 15%, Nasdaq can move 1% just because of that, because Netflix has a sizable portion in Nasdaq too. It's not that big, like it's not Apple big or like NVIDIA big, but it's still medium size, I would say. Past earnings after that one, it had a decent reaction to it too. It was up like 11% on that. So earnings by itself on Netflix can set the tone for the general market, is what I'm saying, which is why it's important to keep in mind that this company will be reporting their earnings going into tomorrow. As far as the technical setup goes, it's setting very nicely at the support zone at the moment, where this is the support on the daily chart, and it's just going sideways. So it's essentially waiting for the earnings event to come out and provide some kind of a reaction before it can start moving. Now, I assume most people would have some kind of a question in regards to whatever's happening with crypto and what's happening with Ethereum. I believe Ethereum, it's larger time frame bullish, but we're approaching a region where you don't want to be holding in long positions. You just want to be taking profits over there. If we do punch above this resistance, then it's nothing is going to stop it from going to all-time highs. The only side of caution I'm trying to suggest is that this region where we're going to be entering, it has been holding the market for the past 2 years or so. Okay. Now, will that region eventually break? Yeah, I think so. It's going to break. Well, it will take like 4 or 5 months to do so, but that's where the market is heading, and that's where I think the break is going to happen. However, I do recognize that this is an untested resistance zone, and when you're entering an untested resistance zone, you need to be very careful longing into it, especially after the market has suffered such a large drawdown and is coming back up to like retested. You don't want to be holding a long position going into it. But when the pullback does happen on Ethereum, if it can come down to this SR at 2800, you'd want to open a spot long position in Ethereum. That it's the structure from this bottom from 1300 till 3200. That's a bullish structure. Like, as in, it's setting up the tone for further rally to all-time highs later down the road in November and October. So going into August, potentially you could see a pullback happen. However, if the pullback does happen, 2800 is the first region to buy. Second one would be around 2600. And from there, I think we would definitely start expanding to new all-time highs to 5,000 on Ethereum. Let's take a look at Bitcoin. The bounce in Bitcoin, it's entering this resistance zone which I have mapped out. Now, something to keep in mind with Bitcoin is that it is bullish, like it's higher time frame bullish. So don't even think for a moment that if I'm calling for a pullback, that's going to make it bearish. No, it's not. However, just around here, when we broke this consolidation's low, that was suggesting to the market that this is a near-term top. Now, near-term tops can be printed, that's fine, there's nothing wrong with that. All that is saying is that it's just a high in comparison to this low. And we're going to be undergoing a pullback potentially to make the next higher low in comparison to this one. And then from there, take it back up higher again, make another higher high. All right, so this is how verticality almost always unfolds. We would go up in a straight line, which Bitcoin did. Like, Bitcoin went up like at least 10%, which is quite awesome, honestly. Like, given how big the asset is now, going up 10% within a week, that's pretty damn impressive. There was a 25% rally from the bottom, but it was up 10% from here, which was the breakout retest we were trying to buy. If by any chance the market were to puke and come down into this broken resistance zone, which is now a support zone, that's where you want to long, especially this consolidation zone. You see this tiny 12-hour candle, which is an inside 12-hour candle, and the market took out the low and just went berserk. Trust me, these areas are very, very strong support zones. When the market gets down to here, it will be like a very fast drop if it does happen. But that fast drop, you have to just have limit order sitting over there with the stop loss below 110K. I can show you how we have traded these kind of drops in the past if the market does enter these support zones. So let's go here. See this particular consolidation zone? Look how the market was just wicking into it, finding support, and then finally took off. Never came back. That's essentially where we wanted to buy spot positions in Bitcoin back in the day. Similarly, over here, this was a resistance zone of a smaller wick, but a massive downside. Now, the reason I'm pointing this one out is because it's a similar pattern, which I'm mentioning right now, but on the weekly chart in inverse. This was an inside weekly candle, and the market took out the inside weekly candle's high, ran it all the way down. So that turned out to be a very strong resistance zone. The market was battling this resistance zone for, I guess, 6 months. For 6 months, we were just sideways into it. Eventually, it broke it out, and then finally we were bullish. We never came back to retest it. But that goes to show that these resistance zones are extremely powerful, or if there is a support zone, that's also very powerful. Now, something similar can be applied on the 12-hour chart, which is over here. That when you see something like this, that would be a very strong support zone in the market. Okay, so that's something to do with Bitcoin. We exited the GBP longs, which we had open in the beginning of the week, because the way the daily candles were closing, the moment it managed to close below the SR level, I didn't want to be a part of it. Like, that's one of the beauties of engaging in the market when the SR levels are very clear, that you can frame your trade setups with extremely precise restore ratios. If the SR level is not respecting, there's no reason for you to be in the market. And essentially that's what happened, that the market went down all the way to this low, picking out the stops, and it's trying to pick out a bounce at the moment. Now, with the taking out of this low on GBP USD, that's turning the market structure bearish. Like, this is the first ever market structure shift which has happened in GBP USD in this entire uptrend. Now, this is important, okay? This is not something which has happened at all since January 2025. So if you were to mark out every higher low in the market, you would notice that every pullback which has happened in the market, it has defended and made a higher low. And this is the first time ever GBP USD is taking out a higher low in the market. Now, what are the implications about it in every other asset class if you have to put in a cross correlation in the markets? What I would say is that, first of all, you need to be actively looking to short GBP USD if a bounce does happen. This would be a resistance zone to look for a bounce in the market. If this gets tested, that would be a potential short region to look into it. That is also suggesting that it's entirely possible now that the dollar index has found a bottom. Now, just because the dollar index has found a bottom, or it could be like, going through like a counter trend reversal to the upside, you have to be aware of what kind of targets you need to be targeting on dollar index. There was a very distinct pattern in the dollar index, which was this inside monthly candle. And if you start closing this monthly candle inside the lows of the previous inside monthly candle, that would trigger a long opportunity up till here, 102 and then 104. Now, how does that relate with every flow in the asset class? Like, how exactly does this correlate with S&P 500 or NASDAQ or Dow Jones or Bitcoin or Ethereum? If you remember, what was the cause for dollar index going down in the past 5 or 6 months. It was a repatriation trade where foreign dignitaries, like let's say European Central Bank or pension funds in Europe or Australian Central Bank or Japanese Central Bank, they were pulling out capital from US equities because they were afraid of the fact that US is wanting to exit the world order, that they were wanting to not provide any security to Europe. They don't want to give any assurances to Ukraine or any assurances to Germany that they would defend against any Russian invasion. So basically every foreign country, they wanted to pull their capital out, put it towards their own security spending. And where exactly was their capital sitting in? It was sitting in S&P 500, or it was sitting in US assets. So they were selling those US assets and they were converting the dollars which they were basically raising and converting the dollar into Euro USD, because they wanted those euros to fund their expansion for security expansion and whatnot. Now, if we're talking about that the dollar is bottoming out and the dollar is going to go higher, then trust me that the US indices will go higher and they would outperform other asset classes like Germany or Nikkei, for example. It doesn't mean that other global indices are not going to go higher. Yes, they're going to go higher, but it won't be at the same kind of breadth like the US indices have been going. Now, funnily enough, there was a lot of rumors floating around in the past 3-4 months when this drop was happening that Germany is the best place to be for your investments, because Germany is stimulating the economy with the spending bill which they're passing. Now, 3 months later, you get to see the results. That's one of the beautiful benefits of free market capitalism, that big money tells you what they believe is true, not what every other person's opinion is about what should be true. Now, when everybody was calling for you need to be positioned in Germany because they're fiscally stimulating and the economy is going to go higher because of that, just compare the return from this bottom all the way to the top, from this bottom to this top. US is currently sitting at 30% return, give or take. Germany is sitting at 28% return. Now, yes, Germany is also basically following what the US is doing, but it's not outperforming the US. It's not Germany is up 50%. So that goes to show that everything is mostly tied to the US economy. If the US economy is going to do well, the world does well. They export the technology. They basically are the growth beacon for new technologies which are being launched. So I refuse to believe that fact back in the days when everybody was exiting the US markets, thinking that just because we're exiting the US markets, it means that we can be safe in Germany, we can be safe in Nikkei, we can be safe in other stock indices. It doesn't work like that. So if you're anticipating that US indices are going to go down, then trust me that everything is going to go down. It doesn't matter what kind of money you're pumping into other indices, which is what got reflected in DAX as well. When US indices were collapsing, the DAX also suffered a massive drawdown in that case. So now that we have mostly discussed on how the indices are performing, I would anticipate that the US indices will keep performing well in the next 6 months or so. Now, there's a very, very specific reason for that. It has nothing to do with the monetary policy. It has nothing to do with what's happening globally in terms of geopolitical risk. It has everything to do with growth. Now, what do I mean by growth? What exactly is the idea behind growth aspect of how US indices are going to perform? The answer lies in comparing what exactly is driving this entire rally in the market for S&P 500 or NASDAQ, that is. Let's just take NASDAQ because that's the growth sector for US technology, right? So from this bottom, which companies have outperformed the index? First will be Microsoft. But Microsoft is the one which actually took the market higher. Second is NVDA. Right. The other is Meta. Meta has also mostly recovered, made an all-time high. then there will be Google as well at some time down the road. Now, if you were to take other smaller companies, like let's say Costco is a very big company in US, but it's not a technology company. It's like a consumer staples company. It's a retailer company. You don't see Costco performing the way the US indices are performing. Why is that? The reason for that is that money is flowing into new technologies which are driving the growth aspect for the US tech or US economy in a way, which is fueling the growth in NASDAQ as well. Now that growth is coming from NVIDIA specifically. Now, if anybody is calling for NVIDIA to slow down, they will be deadly wrong on that. Now, the reason for that is that NVIDIA's revenue is going off the roof. And monetary policy does not dictate what a company's revenue is going to do. If you were to go here and go down, click on more financials, and look at the revenue for NVIDIA since 2021 to like 2024. You see how it's been going parabolic. This is not something which is dependent on monetary policy. Like NVIDIA is not dependent on interest rates being cut or not. It's not dependent on geopolitical risk. Like, if US decides to bomb Iran or like bomb any other country, it's not going to stop NVIDIA's revenue from going up. All right. Now, why exactly is NVIDIA's revenue going off the roof like this? It's mainly because of them creating new AI data centers, or like creating new chips, which are only specific to NVIDIA, and no other company can create it because of the network which they use, which is the CUDA network. And that network powers the most powerful chips in the entire planet. And that particular chip is required to build data centers on which the AI platforms are being trained. Like XAI, which is the platform I use, if I were to show you what AI platform we're talking about, like we're talking about this platform, Grok, all right? That's one of them. I pay for it on a monthly basis, so I have the access to the most latest features on what Grok is supposed to do. If I were to show you the kind of stuff Grok can do, you would be somewhat mind blown on how powerful, on how efficient it is. So this is like an entire transcript of the entire live stream. It's a 2-hour long live stream which I host on Sundays. I pulled this transcript from the entire live stream, which is, as you can see, with the time aspect over there. It's a 2-hour long transcript, right? So copy that, go into the new tab, just paste it, and I've given it instructions on what it's supposed to do. So it's supposed to rate the entire transcript out of 100 and provide me a rating on how well of a job I did in terms of discussing the entire market as a financial analyst. It basically assumed the role of a financial analyst, and now it's assessing this information, and it's gonna give me pointers on how I can like improve this conversation for you guys when I have to like present the summary document on the Substack. Now I was thinking at the moment on what it's supposed to do, what kind of spelling errors it's supposed to fix, what kind of sentence structure it's supposed to fix, what kind of other things it's supposed to do. So once it starts giving you the results, you will see on how powerful it is and how quickly it can like analyze such a large transcript in a very short amount of time. So it's understanding on what kind of assets I've discussed, like it's Bitcoin, Ethereum, altcoins, SUI, XRP, Hype, CRV, Ondo, Algo, and it's giving a rating that for the entire transcript, it's comprehensive in live stream format with specific price levels, risk-reward ratio, historical references. It has penalized me for under-addressing the errors, like occasional vagueness in altcoin picks. So he's like, do a better job of picking altcoins. And then there's like the assessment of sentence structure and flow of information, like how well do I perform when I'm going from one particular topic to the other. It gave me a 72 mark. And then in the end, in terms of like the current details for the market, it gave me a 90 of 100. Like I'm on top of the recent trends in the market. That's what it's saying. So once I know that this is the rating I have, and if I had to like improve on this transcript, I can basically get Grok to improve it, where what I gotta do is, let me show you. So this was the previous one, right? So once I get this post and it has given me the rating, I have this prompt design where I tell it that, all the errors you mentioned, that, there's like a problem with the spelling mistakes, there's a problem with like run-on sentences, there's a problem with like whatever you mentioned, just go and fix it for me. And I tell it to do it, and it gives me like a new prompt, which I can use, a specialized prompt that is. And I gotta copy paste this prompt into this conversation. So what it's going to do is it will basically go over this entire 2-hour long conversation, and it will recreate this entire conversation with everything fixed out, like all the spelling mistakes fixed, all the sentence structuring fixed, like any errors which may be made because of human interference, it will go and fix it for you. Now, in order to train this model, XAI had to accumulate 250,000 GPUs. Now, because they had to assimilate those GPUs somewhere and obviously pay for them, where were they getting those GPUs from? They were getting it from NVIDIA, where NVIDIA was receiving massive orders from every AI company, like not just XAI, like even Chinese companies in China. Why do you think NVIDIA gapped higher when this news came out that China is going to be accepting those new GPU models which NVIDIA is going to present, and NVIDIA went up 4%? Because China is a very huge market for NVIDIA, and that's even more growth for NVIDIA over there. So when I was discussing on what the revenue scale looks like for NVIDIA, where the hell is that? Like, why exactly is the revenue going like this? It's because other companies, the other top 10 companies in US, which are the Magnificent Seven, how you may put it, whether it's Microsoft, whether it's Tesla, whether it's Amazon, whether it's Google or Meta, all of them are racking up billions of dollars, giving it to NVIDIA, and they're purchasing all the high-performing GPUs from NVIDIA itself so that they can build their data centers, which look like this, to train the new Grok models, that is. So Grok is beginning to paste the entire conversation. So I don't even have to look at it. I know what it's going to do. I can just go and do my other work. That's the beauty of it. Like, why you need to be using AI is it's a massive productivity booster, where once you've trained it on what kind of stuff you wanted to do, it will just do the stuff for you in the background while you're analyzing the markets like I do, or I can go and do other work. So it saves me massive amount of time. Now, in order to train this model to be so highly specific and highly accurate in terms of the stuff it does, you need massive amounts of GPU clusters to train it. And that is one of the reasons XAI has been pumping so much liquidity behind buying GPU clusters from NVIDIA. Now, they had 250,000 GPUs to train this model for Grok. You know how much money they're pumping for the next model? They want to scale up those GPUs from 250,000 to 1 million GPUs by this December 2025. Just purchasing another 750,000 GPUs adds another $5 billion worth of income on this particular metric for NVIDIA. Just XAI alone, one company. And I'm telling you that there are 25 other companies which are buying GPUs from NVIDIA because they want to compete with XAI on what they're doing. So this revenue, which I'm talking about, it's gonna keep going off the roof, is what I'm saying. It will go to $150 billion and then $200 billion because the demand for GPUs is incredibly high, with other companies like Meta, Tesla, Amazon. Amazon uses it for their web services. Google uses it for their DeepMind. Tesla is using it for XAI. Even Adobe, I guess, is gonna buy if they want to join the AI race. They've been sucking at doing anything. I think Apple might at some point try to establish their own GPU framework in order to do something in the AI race. So Apple has a lot of cash, and they will be pumping a lot of cash to buy stuff like this. So when all these large companies are pumping money into NVIDIA, and NVIDIA is basically tied up with whatever S&P 500 is doing, why does it matter what the monetary policy is going to do? It doesn't matter in the end, because when revenue is increasing at such an incredible pace and you're in the middle of a new tech revolution, monetary policy is not going to matter for a while. I think at least another 6 to 8 months, And what you need to be paying attention to is how NVIDIA's earnings report performs when they report earnings in the next quarter, which is on 27th of August. Okay, if NVIDIA is going higher like this because of their earnings boost, this index is not going to go lower. It's that simple, because NVIDIA has like 13% weight in the entire S&P 500 index, and it has about 14% weight in NASDAQ index. So Microsoft does well if they have high performing GPUs from NVIDIA, because Microsoft is basically ChatGPT. Anytime any person uses ChatGPT, they're basically paying to Microsoft, because ChatGPT is Microsoft's subsidiary. They have provided a massive amount of funding to ChatGPT to function, for OpenAI that is. All right, so if Microsoft is posting like bullish patterns and it wants to go higher, then you can be rest assured that NASDAQ's going to go higher, because Microsoft and NASDAQ are basically the same thing. So that goes to show that there's going to be like an incredible concentration risk in the entire market, where these companies, which are specifically AI focused, because that's the next growth part in the entire index, if they are all pumping money into NVIDIA, and NVIDIA is going to go higher because of the higher earnings, and Microsoft will perform well because ChatGPT does well, these are the only two companies you need to understand on what the index is going to do. Everything else just becomes obsolete. Like, you don't need to look at what other companies are going to do at all. Like, yes, it's nice that PLTR is doing well. I don't think it has any effect on the index. AMD is beginning to do well, where you can see that AMD is competing with NVIDIA for chips, and their new chips are actually doing well. So if they are becoming an active competitor to NVIDIA, that's where the money is flowing now. And AMD is bigger to catch up with NVIDIA as well. JPM actually did not do well. It came down, and that's partly the reason why S&P 500 suffered this kind of a drop. But as you can see that, you know, on the weekly chart, it's not doing much. It's just sideways for the past 2 weeks or so. Now, once the big tech starts reporting next week, where the likes of Microsoft has earnings on 30th of July, and then Amazon reports on 31st of July, Google reports on 23rd of July, and then Tesla reports on 23rd of July. These are the ones which are going to move the index. I don't think anything else is going to move the index in the meantime. So if NASDAQ is just like sitting idle, not doing much, just going sideways, you can be rest assured like it's not going to break down. Just because it's going sideways, it's not bearish. Any news event which does come up, it gets heavily bought up after that news event transpires. So all I can say is like it's sideways, it's gaining a lot of energy. Let's see what Grok has done, if it has finished or not. It's still going. Okay, so we have done an entire discussion on the topic, and Grok is still like pumping content for me. It hasn't quite finished printing the entire transcript, which I wanted to recreate. So basically this entire transcript recreated with all the edits I've told it to do based on this particular prompt. And I can assure you that once it's done printing, we will do a comparison. We will compare if the word count of this particular transcript I provided is exactly the same as the, okay, it's almost done. Summary of changes is here. We will basically compare that the output which is being provided is exactly the same as the previous one in terms of word count. So let's copy this, take it here. So we can remove summary of changes, we don't need that. That's the new one, so we have 16,000 words on them. We're going to use the original transcript, which is this one, and we'll count how many words were in there when I submitted it. It has 16,537 words. So you see how accurate it is? It only made a difference of 500 words. Why? If you go down in the summary of changes and read what it did, it fixed all the spelling errors. It fixed sire or su to sui. It fixed VIF to WIF, which is the coin's name. It fixed off to AVAX, because that's what we discussed, owner to ondo. algo to algo, Solana to Solana, Nikkei to Nikkei, like DOX to DAX. Anyways, all the spellings were fixed. I didn't have to like go through the entire 40-page transcript like fix these spellings. The run-on sentences, as in like broken sentences, which were not making a lot of meaning, it cut it down. It basically removed everything which was like useless. So removing sentences which were useless, it reduced the word count by 500 words. That is. But that goes to show how intelligent this model is and how well it can perform your work in real time. If I were to do this entire thing on my own, manually speaking, it took me roughly 2 hours just to go through the entire thing. Which is one of the reasons that these companies are pouring billions of dollars in XAI or like in GPU cluster formation, because they want to train these higher performing models so they can like launch newer applications for their customers to use and pay like, they will charge like $300 a month, $400 a month, and the revenue for those companies will be like off the roof due to that. So needless to say, if there is so much revenue coming into the market due to these models being implemented and there's high demand for it, this rally in NASDAQ, or this rally which is happening due to NVIDIA going higher, is not going to stop at all. It will keep going for the next 6 months. So if you're thinking that NASDAQ's going to stop here at like 23,000 or 24,000, I would be very careful on like calling any kind of top at the moment. Where revenue accelerations are one thing, and if revenue is accelerating for a company, that means the market cap of the company is growing. And in that case, NASDAQ can easily be sitting at 25,000 or 26,000 by the time the year comes to an end. It could go up another 10-14% from here for the year end, that is. Okay, so if you look at the monthly chart, this particular rally reminds me of the COVID bottom, when the government printed so much money and pumped it into the markets, and the markets just were going vertical for like 2 years after that. But there's a difference. The difference over there was the government intervened and they were providing money for the markets to go up. In this particular case, we are going up because there's actual growth happening. The money is coming from other tech companies who are wanting to grow new products and sell it to customers. So it's real market capitalism at work. Okay, that's the best one actually, because the economy grows. There's more jobs being created due to that, or like those jobs are not there yet, but they will come. Like as new businesses get launched or new companies get launched after done training these models, they will be hiring new sophisticated engineers to work on these models. So jobs will come over time. Those jobs are not here yet. So when jobs are expanding like this, that leads to GDP expansion to the upside. So that's the growth aspect which I wanted to discuss. This is how the market is growing in the next 6 months or 8 months or a year or so. And if the growth is happening, then restrictive monetary policy doesn't matter. Even if the rates are sitting at 4%, no, it doesn't matter, because if the revenue is increasing, why does it matter if the rates are high or not? The rates are high only make a difference to the economy when it causes unemployment and it causes people to borrow money at an incredible premium so that they're not able to launch new businesses. If the money is coming cheap because all these big tech companies have so much money in their pockets, they have been sitting on this money for the past 10 years or so. They've been accumulating due to high earnings or whatnot, and now they're spending that money by buying these GPU clusters or whatnot. That's money going into the economy, and that's new money in the market which is pouring into NVIDIA, and that's driving this entire growth, which is the reason that NASDAQ is going higher. So I would not be calling the top on NASDAQ at all, and I think I've really solidified this point that the fundamental case is the markets go higher due to this revenue increase. That as long as NVIDIA is increasing its revenue with the new funding coming into NVIDIA's chips, I think NASDAQ will go higher along with it. After XAI launched their Grok 4 model, they immediately, the next day, received $5 billion in funding from other investors. Private investment, $5 billion, one day secured. And they put in a giant order for 750 GPUs to be bought from NVIDIA for the next model they're going to train, which is Grok 5, that is. And they're expanding at a massive pace. The manufacturing they're doing, if you were to go on their website So this supercomputer which they built in Memphis facility, like this entire thing, they built it within 4 months. Something which takes 2 years to do, they're expanding at an incredible pace. So if they are expanding at such a massive pace and they are putting in giant orders from NVIDIA to build their facility, XAI by itself will cause $5 to $10 billion in revenue to go higher for NVIDIA. And if NVIDIA reports like another 10% beat in the revenue, that means Nasdaq's going to go higher because of that. All right, so this is like a private investment which we're talking about, which is coming into NVIDIA in the form of GPU clusters or whatnot. So that's something to keep in mind. But let's dive into what we have to do with the technical part. Like this is just the fundamental part which I was talking about, which I think nobody really talks about, that what's happening on the fundamental basis of the economy and how it's growing, like, you know, the why part, why it's growing and how it's growing. That's something which nobody really knows or nobody talks about. It's only like, you know, somebody's been using these models and then they can see what kind of use cases there are for these models and how they're being implemented to like supercharged businesses. Then you can appreciate the fact that, you know, there's like real demand for these products, and that's gonna cause like revenue to go up for NVIDIA in the longer term, that is. So this particular drop which happened in the market for US30, that definitely is triggering an inside weekly candle failure. I was actually away from my desk when this drop happened and I was not able to execute on it. What I will tell you is that this is a long trigger. This is definitely a long trigger, and this hourly S&P would have been like an entry to enter long, and we should be expanding up top going the next week. So if you're not positioned long at the moment and you want to position long for it, you can definitely do it, but you would have to put a stop loss below here at 43,723, 43,736 for US30, and the risk reward ratio on that would be something like this. It's about 2.23 risk reward ratio. If you want to put in more capital, like, you know, get some juice behind it, put it in Nasdaq. Don't go in US30 because use relative strength. Nasdaq has been printing some very, very strong patterns where you could call this like an ascending triangle, whereas US30 has been more weaker, as in like it gave like a deeper pullback. Now the setup is valid in both of them. If you compare Nasdaq with US30, you will see that Nasdaq is printing higher lows while US30 was printing lower lows. Now, because we understand the dynamics of this pattern, which is the inside weekly candle failure, we know that these lower lows are going to finish at some point, and they will like start going higher once the market structure shift does happen. But if US30 goes higher, that means Nasdaq also goes higher. Like, you know, Nasdaq is the growth part. So I'm already positioned now long on Nasdaq. Like my stop loss is down here for 22,369 from the long position we took at the beginning of the month. Essentially, I was positioned long for the entire month, where Bitcoin going higher was already suggesting that Nasdaq has to go higher. So our long positioning is from 22,400, and we're just holding the long position. Like nothing is telling me that I need to be closing that long position. However, what I will tell you is that you need to raise your target. Like your target should not be 23,000, which was actually hit. Like we did hit 23,000, but I did not close my long position. I'm still holding it. I want to hold this long position till 23,800, which is the next leg up in Nasdaq once this consolidation zone breaks. And it is a consolidation zone, that's for sure. It's not a top, any sideways price action which is happening in an uptrend. That's a consolidation zone, and we should be expanding higher. So once that expansion is underway, going into July end with the big tech earnings reporting next week, that will be providing the push to Nasdaq. There is no push provided to US30 with the US tech reporting, because the tech index is like in Nasdaq primarily, so it's not in US30. Now, just because there's a pattern in US30 and it should be going higher based on the pattern, my thinking is that the upward momentum in US30 will also be driven by the likes of Apple, Microsoft, Amazon, Google, because they're part of like US30 as well, like not at the same weightage. They have higher weightage in NASDAQ. So when these companies go up by 5 or 7% in their respective earning reports, it would have a much larger effect on NASDAQ than it would be on US30. So US30 may go up like, 4%, but NASDAQ would go up like 7%. That's the difference. So I would much rather just stay on NASDAQ longs than trying to like, snipe the bottom on US30 and take it higher. So if you want, you can like add more to your position in NASDAQ and just ride it with a stop loss below 22,377. I do think it's gonna keep pushing higher to 23,800. So you still have like a lot of room to capture. How do I know that it's gonna keep going higher? You just compare it with Bitcoin. Like I came across a pattern which was incredibly interesting. The pattern was over here. If you zoom in, so this particular low in the market on NASDAQ is this low in Bitcoin. This one, okay? So you see how these up candles are these up candles, and this consolidation is this consolidation. Now Bitcoin broke out from this consolidation and went up 10% already. As in, from here, it went up 13%. NASDAQ hasn't broken out of this consolidation. It's just extending this consolidation out. So when you can see that this is what happens once you break this consolidation, all you gotta do is be patient and hold your long position on NASDAQ, knowing that we have seen so many times in the past that Bitcoin sometimes does lead the market, and that is also primarily how we position in the long portfolio at the bottom from here, where this particular bottom, which is printed in NASDAQ, but at the same time when Bitcoin printed, like they both had the same price action. I think I've drilled this down multiple times. I don't need to repeat it, but there have been instances where Bitcoin would go first, as in if you look at this particular rally, see this pump here on Bitcoin, this giant candle, that was being printed when NASDAQ was sitting here. Like this pump had not happened on NASDAQ. We were sitting on 9th of May, and this candle was already printed on 9th of May, like on 8th of May that is. So Bitcoin went first, like it pumped massively, and then it went sideways while NASDAQ rallied and caught up with Bitcoin after that. So that's the kind of a dynamic I'm trying to show you over here, that this consolidation, which Bitcoin broke out from, it is going first. Like it's already telling you that what NASDAQ is going to do in the future. So if you can see what happens in the future because of Bitcoin going higher, just don't get shaken out of your position just because the market is going sideways. That's all I would say about NASDAQ. Now, if NASDAQ is going to go higher by another 5-7%, what companies are going to drive it? First one will be Apple. I think I've already mentioned that I've been harping on Apple going higher. I will say this again, this resistance is toast. It's just going to wait for some kind of a catalyst to like break it. I think that catalyst is going to come on earnings, where after earnings, it will have smooth sailing to 225. And it will deliver it to the promised land. I'm considering that I want to close my position in Apple when it reaches 225 and closes this open gap. And I may not hold it till 260. There's a very specific reason for that, okay? The reason is I don't want to sit in front of my screen looking at my investments going into August and September. I have some personal commitments in my life, and I would much rather focus on those commitments than look at investments every other day. I would much rather come back in October with new investments to be opened and take it from a fresh start, where all the capital which we have already generated in the past 6 months, that can be put to use back into the market again in October. And knowing the seasonality aspect of the market, if I were to show you how the seasonality behaves for NASDAQ, this is 2020, right? Like go back to what happened in 2020 and 2021. We tend to go through some kind of a pullback going into September. So the market generally gives you a 10 to 15% pullback in September. And the bottom gets printed in October, November, and then we basically go for the rest of the year into January and February. So your job would be to basically position going into October and ride it all the way to like March next year for that 5-month period. If you want, you could avoid trading in August and September altogether. You're not going to miss much, personally speaking. However, I'm writing out this pattern, which I do have. I'm not closing any position whatsoever, but I'm thinking about the matter that once this earnings are done with and Apple reaches certain targets, like it fills this gap, I may as well just take the profits which I do have and go on the sideline until like October, and then I'll reopen that position in October and ride the remaining trend from October till March. That's more so from like the timing aspect of things on how I want to position for the market. Now, it's not to say that the market is going to go down in that period. Like, there's nothing suggesting it's going to go down. At the moment, when I'm looking at the structure in the market, this structure is very much bullish, and it's reminding me of how the markets were behaving when they had made all-time highs just after they went above the COVID highs. It's the same market, trust me. The pattern is like eerily similar. Like the moment you make a new all-time high, you go sideways for like 2-3 weeks, and then from there you just keep expanding and going higher. The reason I'm saying it's the same pattern is how much time it took to retrace this entire 35% drop. The entire drop basically got retraced within like 2-month period, and that's exactly what the market did in our case as well, where this drop was like at least 23%. It was a sizable one. Not COVID big, but just big enough. And the retracement happened very, very quickly, where we went up within 3 months to new all-time highs. And that is giving us more of an indication that you have to treat it as something which has happened post-COVID crash. And we are likely looking at some expansion to the upside, and it's not going to stop anytime soon. So even if I'm saying that, there's like a seasonality aspect of the market where the market can go sideways from August till September, treat it with a grain of salt. Like we're in a special circumstance in the market that if the revenues are increasing for companies, yes, the corrections might happen where the market can go down 5 to 7%, but it's a gift. If the correction does happen and you end up coming down to test this region for QQQ SPY, that is, if you want to look at the NASDAQ index, it will look something like this. So these SR levels, which have been created, if there is a market pullback going into August and September, then this region is where you want to go long for November and December and January as well. That will be a gift, personally speaking, if the market does give you that kind of a pullback. In regards to this particular gap, which is setting open, I don't think we have to fill this gap just yet. It can keep going higher, mainly because of the pattern in play on the quarterly chart, which is this quarterly bullish order block. And we did this data analysis in one of the weekly live streams where we discussed on whenever the market creates a quarterly bullish order block, the next quarterly candle is almost always bullish, it's never bearish. And the next candle which gets printed, at an average, it gives you like 12 to 13% return on that quarter. So this one ended up giving like 22% return, but on average it's like 13% return, dating back to like every quarterly bullish order block which has been printed in the market for the past 20 years or so. Okay. So if you were to map out every quarterly bullish order block which has been printed in the market, you will see what I'm talking about. This is not a quarterly bullish order block. This was one actually, and it held as support, but we were just getting out of recession, so it's fine. And then this one, This one as well. You could say this is a quarterly bullish order block. This one, sure, why not? This could be a quarterly bullish order block too. So that goes to show that whenever you print quarterly bullish order blocks, which look like this in the market, none of them have ever been breached, ever, when they get printed. So that's also one of the reasons I want to be long in the market going into the next 2-3 quarters or so. So knowing that this is the higher time frame aspect in play for the market, it becomes very easier to risk manage your positions, especially on a longer term portfolio. So if we are anticipating higher prices in NASDAQ, that means Apple's going to go higher. That means Microsoft's going to go higher. That means Amazon should also go higher. Google is one of the favorite ones for me because there's this massive gap. So pay attention on how whenever NASDAQ goes through this down candle, Google is not giving you any reaction whatsoever. It's just doing its own thing. That's exactly what you want to see. If you think that this particular market will start catching up with NASDAQ, this is really what you want to see, that whenever these giant wicks get created in NASDAQ and Google is not reacting, that means that there's inherent buying pressure in this market, which is going to take it higher eventually. And it's immune to any kind of drawdown on NASDAQ, that is. But also, like, whenever you see these spike downs, right, like in NASDAQ, try to question yourself, is that spike down actually going to take NVIDIA lower? Like, is it going to make this chart come lower? If the answer is no, then you should be buying that drop, which is happening in the market. So if you were to map all the higher lows in the market for NVIDIA, since here, this is what you call an expansionary market, where every 3-day candle is not even violating the previous 3-day candle lows. There's a little bit of a stop run, but you can see that it's expanding higher. So whatever pullback happened, it was basically creating like a 3-day low, and it's going to keep expanding higher. So if it's supposed to go higher in this fashion, like it's been going higher since this bottom got created, like if you extend that all the way to the bottom, like, do you really need to be concerned about the market for NASDAQ? That is, it may be going sideways, but if NVIDIA is the one which is driving it, then just follow the source. The source is NVIDIA, and it's making the NASDAQ index go higher. And due to that fact, NASDAQ will just keep going higher if NVIDIA is going to go higher. It doesn't matter what every other constituent is doing. If Microsoft and NVIDIA are going higher, NASDAQ will go higher. It's that plain and simple, at least from a market standpoint. So when this particular drop was happening in the market and everybody was freaking out about something, you need to be asking, is that really going to stop NVIDIA from going higher on whatever is happening with the monetary policy standpoint or geopolitical standpoint? And almost always the answer is going to be no, because the technology which is being developed and because of which NVIDIA's revenue is increasing, that has zero impact from monetary policy or geopolitical conflicts. All right, so that's something to keep in mind going into the next 6 months or so. That's exactly what I wanted to like drill down in this live stream. So before we close this live stream, are there any questions or in terms of what you would want me to look at in the market? Yeah, Momentum says keep longing with a smile. Yeah, I would say so, yes. You're welcome, Mercia. Every now and then I'll do some streams where I just dial down on whatever is happening with AI technology or what's happening with companies which are investing in AI, because that's the new paradigm. It's the new narrative in the market. Like, you know how Bitcoin was the dominant narrative back in 2017? like any company which will, like, mention blockchain in their news report or in their earnings report, it would make the company go up like 100%, 200% back in 2017. It's the same kind of a dynamic which is present in the market right now with AI. Yeah, Momentum, I'm glad you're using Grok. This is one of the best models, hands down, which I've used. I've been using Grok for a while. I think I've been using it for like 6 months. I've used ChatGPT for some time. I've used Gemini for some time. And then eventually came to Grok. And because of the real-time integration with X, I can be like, let's try something out. So go here on Twitter. I suppose everybody has a Twitter account. This is my trading handle, right? So I'm going to use that. Go here. Search the first ever tweet made by the username on X. It's basically going to dig down my Twitter profile and see like what exactly was posted by me when I first made my Twitter account, which was maybe years ago. I've never actually done it. Let's see if it does it or not. It's saying let's search for the user's profile to find when they join. And it's going to basically go on that date and search for like, what kind of a post I made during that day. So in the newest Grok model, you don't have to physically tell it to carry out deep search or thinking request. It basically automatically turns it on by itself if it has to. Like, in this case, it has to, because it has to like think really deep on what it's supposed to do. Yeah, it's going to take some time to do it. But I guess you sort of understand on how AI is incredibly powerful. And if you're not using it, I think you're missing out. It's basically like missing out in terms of investing in Bitcoin back in 2013 or 2018, where it's still like in very early phase of its development. Like, these models are like the benchmark models for much superior models which are going to come down the road. And if you don't know how to use them, I think you'll be missing out in the next 2-3 years or 5 years or so. I'm going to finally carry out the search. Now, for reference, I have 1081 posts. If I were to scroll down on my own to try and find when exactly did I make my first post, it will take me 30 minutes, give or take, because I think I made my account 6 years ago, 6 or 8 years ago. So these are like really old posts. December 2020. I mean, you can keep going down. I made my account in like 2016. Interesting. So this is the benefit of it. When you gave a command to it and it's not able to execute on that command, it will just automatically adjust the next strategy you're supposed to do. It's not going to be like, the command failed, I can't do it. It's intelligent enough to adjust the approach on its own and get back at it again. So you can still be like, doing your own work, and you don't have to worry about it if it's going to like provide you that answer or not. But that goes to show that, it's far more advanced than the previous models. Yeah, you can keep going down. I have a very long history on Twitter. Holy shit, they boosted it. Alright. Now it's going backwards. Interesting. Anyways, while it does it, let me see what's happening with the markets. Yeah, the markets don't care whatever is happening with the news item flow, with Powell and whatnot. And quite frankly, Powell cannot be fired. Like, he is in it until he will leave the job, which will be next year. What you need to understand is that if, for example, Trump were to go out of his way and find ways to fire Powell, I think the bond market would revolt. There will be a massive revolt on the financial markets hand. And Scott Bessent knows it. Scott Bessent would never, ever endorse firing Powell. And I think that's one of the reasons that Trump being so cataclysmic, like, he explodes from time to time. Scott Bessent is the guy who keeps Trump in check. He tells him that, this is something you should not do. This is something you can go as heavy as you want into. So he has specifically told Trump not to fire Powell because he knows that foreign investors will lose confidence in the US stock market or in the US bond market if you fire Powell, because the independence of the Fed would be in question. Like, it might be nice for the next 2 years or so, but he would be setting precedent for future administrations. Like, when Trump's out of office in the next 3 years or so, and the next administration comes in, maybe it's a Democratic one, maybe it's a Republican one. So every president would know that this is possible to be done, and they would use the precedent which will be set by Trump to fire any future Fed chair. And that's not something which you want to see for US. That will be highly, highly detrimental for the financial framework with which the US political policy is set up, monetary policy, that is. So the independence of the monetary policy is the main reason US is such a big contributor on the global stage in terms of growth and whatnot. If it became clear that any president can come in and just fire whatever the Fed chair is going to be sitting at, then it will be incredibly hard for foreign investors to trust whatever the Fed chair is saying, because they will be questioning, you might be saying this right now, but is it good enough for your sitting president? Because if he doesn't like it, he may just go and fire you, and then we have to shift our entire stance. So this kind of thing cannot be happening. The Fed cannot be political in this case, which is one of the reasons Trump cannot fire him. Scott Bessent has already made it clear to him. So he can keep threatening to fire him, but he would never fire him. I personally think that it's very, very hard to go down that road, to set that precedent for future administrations. Wow, it's still going on. That goes to show that it has to really, really dig deep in terms of what was the first post. I'm still thinking about it. I think I made this. Did I make it for GBP? Yeah, for GBP we have to wait for this one to come. By the way, the inside monthly candle pattern, which was present on USD/JPY, that got tagged, and I'm personally waiting to see if it's going to make its way to this SR level at top, 151.946. I've been waiting personally for this level to be hit for far too long. I think almost 2-3 months now, where if it's getting closer and closer and closer, I have to be sharp when you get there. I misspelled something? No. Is that the one? The first ever Apple and Amazon report their earnings after close. No. I don't think it got it right. It searched through 483 of my posts. All the way going back to 2023. I think it gave up finally. It didn't quite get the answer. But that goes to show that it can search your entire Twitter profile, and you can ask it to just provide me the latest post from OBC letter discussing the markets. Slow at the moment. Nikkei has been annoying. It stopped me out of that position. I probably will have to re-enter. I was not anticipating that the market would come all the way down here. Like, it just did enough with the wick because of Powell getting fired to take me out and then go back up again. I'll probably wait till next week because now I think the time has somewhat run out for this 2-week candle to expand. We still have 2 more days left, but it's turning into an inside 2-week candle. So I'll wait for the next weekly candle to come in before I enter a new position. So this area now is very strong support zone between 39,000 and 38,980. So I'll be using this area to enter the long position. Yeah, so it says over here, breaking President Trump claims that Fed Chair Powell is already under investigation. It's unclear exactly what the investigation was for. So that's the Twitter post. It's coding it. This was today at 9 a.m. Yeah. But yeah, that goes to show on what Grok can do. And there's another feature which was added that is actually very, very useful. It's you can actually talk with Grok on PC itself. So when you're talking, it's actually like registering what I'm saying. I can mute the mic, but it will give you an option to screen share. So Grok can actually read your entire screen. Right now I'm stream sharing on Discord, so it's not going to show up. But once I'm like, done streaming, it will give you an option to like actually screen share your own screen. And you can like show it trading view terminal and be like, hey, analyze this chart for me and find out information about this particular stock on earnings report. Or like let's say when you go on Amazon and you're like, what exactly happened with Amazon today? Like as I'm talking, Grok will be registering it in the background. And you would basically be asking Grok to like do the analysis in real time. So I just switched off the mic and it's registering my voice now. So that's actually very, very good. Like it's very smart that you can use it as your assistant in the background as you're doing your research, which shows you that how powerful AI is and how they're imagining different ways on how you can like implement AI with business solutions or like new finance professionals or anybody who's a creator. They will be using AI as an assistant going forward. But yeah, that AI trend is not going to stop. I think it's very early and it will most definitely be driving a lot of demand forward. Where you have to be wondering if you're long on Tesla or not, because XAI is Elon Musk's company. And if XAI is like the frontier model at the moment, and it's one of the best ones out there, and he's pouring so much resources into XAI to like build it, what happens when there's a shareholder vote to incorporate XAI into Tesla? And Tesla becomes the parent company, and XAI is like the subsidiary company, just like OpenAI and Microsoft. Tesla's revenue is gonna go off the roof because XAI is in high demand, and it will be in high demand. And Tesla will have a new revenue income stream coming to it, which is different from cars or robotaxis or whatnot. So once that integration happens of XAI into Tesla, this will be a juggernaut, this company that is. And it will most definitely be going to like $1,000 mark then, where the revenue generation from XAI will be only increasing in the coming years or whatnot. So this pattern on Tesla, which I'm looking at, which is this double inside quarterly kind of failure, it's still in the early phase. It's not starting to expand yet. So if you want to position in it, you could position in it. And I was personally waiting for it to come down till here into this weekly bullish order block. So I was wanting to position between $270 for Tesla. I will have to interpret what the market wants to do in the next 7 days when its earnings is out. I don't want to be positioning ahead of earnings because if it dupes the earnings, like if it has a negative reaction to earnings, it may as well come down to 270 due to that, which is one of the reasons I don't want to be positioned right now. I also understand that there is a inside monthly candle in play. So if earnings does disappoint and it doesn't do well, and it comes down for 270 due to a gap down, I'll be buying Tesla. I'll be holding it for like the longer term and positioning it for, let's say, the next 2-3 years for this AI revolution which is happening, because Tesla will be at the forefront of it. Like, they're already integrating Grok into Tesla mainframe with the company's cars. Like, all the electric cars will have Grok as an assistant. Like, how I was like talking about Grok is running on the background for my PC. It will be running in the background in your car when you're driving. Like, think about that. Like, that's so fucking cool, first of all, that you will have AI talking to you while you're driving. And Tesla will be the only first company to ever do it, because they have their own inbuilt model. They can do it. Every other car company cannot. So that gives them like a massive edge in every other car company if people want to buy cars which are like AI powered or whatnot. So Tesla will be the first company to ever pull it off. But that time frame is still far away. It's still like 6 to 8 months far away. But you want to be positioned ahead of the trend, not like after it starts happening. So that's something to keep in mind as well. I think I stretched this live stream a bit long than it was supposed to be, but that goes to show on how excited I am for the AI part in the markets and what exactly I'm seeing with the AI implementations which are happening. And hopefully you get to benefit from it too. So I'll leave it over here and I'll catch you guys on the Sunday live stream. Thank you, Shadow. I'm glad you enjoyed it.